Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Good morning. We're going to put that right in the old chat line here. Good morning. And happy Xmas to... Oh, there we go. I remember when I was young on the trading floors, it was always fun to watch the teller rate. Teller rate was like the interbank currency market and bonds, and you could see the way the world would slowly unwind. I guess it was like let me think. We started the currencies off at 2:33 in the morning Eastern Standard Time, and then I used to get in. Most of the time, I'd get in around 6 or something like that, 6 a.m., maybe a little bit earlier. And and then by I guess it's like 11 o'clock Eastern Standard, like London close. Markets were dead. All you see stuff like is Merry Christmas, Happy Xmas. It was all instead of quotes of markets, you would be seeing that instead. We would just be standing around. And next thing you know, we'd be having a drink, and markets were getting slower and slower. People would be disappearing for. I'll be back in an hour and a half, or I'll be back in an hour, and they'd show back up and had drinks in them. And for us back in those days, the markets all stayed open until 4 o'clock Eastern Standard. Well, at that time it was 3 o'clock, I guess. It was 3 o'clock, and then they moved it to 4 o'clock, and we used to open 10 in the morning to 3 in the afternoon, and on Wednesdays we would have half a day, that type of thing, and to get caught up with paperwork. But once the computer systems really started to become efficient, then that stopped, and then before you know it, we were opening at 9:30 instead of 10 o'clock, and next thing you know, we were closing at 4 o'clock instead of 3 o'clock. We picked up like an hour and a half of trading, and markets were becoming more active, and currencies were active, and it was everything was active. Back then, there were no stock index futures. All there was is the indexes themselves. So you couldn't trade you had to do a basket of the stocks. You had to, and then they created indexes with options, and then we started the futures contracts, and it was interesting. It was growing times in modern finance. I used to call it modern markets and how they work. I used to do a little lecture for people who would say, could you come talk to our Knights of Columbus, or our Kiwanis, or any of these social charity groups, have conversations, and I'd come in and give that conversation. So here we are, here in the United States, it's 7:34 a.m., and around the world, it's already Christmas Eve to some people, but the interbank market, I'm sure I don't have a teller rate anymore. Matter of fact, I don't even know if teller rate's probably owned by Reuters now. That's a good question. Is teller rate even in business anymore? Let's see. Let's take a look and see. Teller rate. Teller rate system. Let's see what it says. I see. Telerate was a U.S. company providing financial data to market participants specializing in commercial paper and bond prices. And they also had currency, and the currencies on there too. Telerate systems profile. I guess that Bloomberg. I guess Bloomberg owns it now. Something like that. I think that's how it worked. That's what it is. There we are. So it's owned by Bloomberg. There we go. So that was always fun. It was unique. You saw people from all around the world celebrating a holiday, and there weren't many global holidays. This is one of those global holidays. I mean, the markets get slow for the 4th of July for the United States. I mean, we're closed, but the world doesn't really pay attention to it. Same thing with, I guess, New Year's. New Year's, and you know, it was very fascinating. The markets would open, Christmas Eve, or I'm sorry, Christmas Eve. The markets would be, moving slow, and then basically, and they would not open, especially European markets. They wouldn't open up until after January. So in other words, we had a really slow market between the January 25th and January 2nd. And I remember the Swiss market wouldn't even get going until like the 7th or something like that. It was 2 full weeks. So the markets were actually physically closed. And it was like, wow, how quiet that is, enormously quiet. So, it was the classic, it was classic, and we enjoyed it and grew from it, and I just thought, since today is like that in many ways now, it's got that same flavor without the exchange. That's all. And here we are, as I always like to say, we're really the cyber pit. We're a cyber crowd. In other words, we used to call when traders traded on an exchange floor, you had in the future side they referred to it as a pit, and on the equity side in stocks they refer to it as a crowd. And they were fun times, interesting times. You had all kinds of individuals there doing different financial things, different strategies and concepts. It was the center point of execution. Now, we have an electronic market. It's not much of a necessity, and commissions are enormously cheap. What people used to pay $12 for, now you pay a cent for, or get it free. Can you imagine? Commissions have dropped to that point. You could have paid $29 for buying 100 shares of stock. Now you can buy that stock for free. That's incredible. I remember hearing stories even in earlier days when the brokerage houses, were not so independent, I guess it is. I don't know how to describe it. Before the change of the laws back in the 70s, people would pay $300-400 for execution for 500 shares of stock, which was incredible. And the price was always $12 wide. It was at least an eighth, if not more. So, it's just a unique thing to watch and see. Just taking another sip of tea here as we have this simple start of conversation. So let's take a look at the dollar index. What do I have up on the screen here this morning? That's Goldman Sachs. You can see it's been lifting up the last couple of days. Let's see what the dollar index looks like this morning. There was, we've talked about all the complications and confusion, how the Fed does one thing and the market does another now. I mean, I don't know how Mr. Powell is going to survive these next 2 years. The Congress may just take enormous amounts of power away from him. I saw somebody last night say that before the creation of the Federal Reserve in 1913 by Woodrow Wilson, for 200 years the American economy had recessions and expansions, but it never had explosive inflation. It wasn't until the Federal Reserve came along, and that's all we get, in and out, explosive inflation. It's because they don't understand the financial markets. They don't understand economics, the Federal Reserve. It was supposed to be a stopgap measure to compensate for recessions, be able to get money to companies that needed it, But their first failure, I guess you'd say, was 1929. The stock market crashed, and the Federal Reserve got in there and confused things, and it went on for almost 10 years. So, as a matter of fact, it went on for 11 years, the bad economy. Now, no doubt, when you came down from like 250 on the Dow down to 50, it was like a 70% drop or 80% drop. there's no doubt that it would climb back up, but the economy itself never recovered because of the concepts of bad economics. And so I think we're coming to the end of many things here in the States. Oh, looks like it's snowing in New York now. Yeah, look at that. Snow is starting to come down in New York. It's been kind of warm, so I mean, it's last couple of days have been below freezing, but I'm seeing on the financial channels there, they're showing the outdoors and so forth, and they're starting to get some snow. All right, there you go. Anyhow, let's see, what else can we say about that? Oh, so anyway, yes, they're probably going to pare back. They're actually thinking about making the Federal Reserve a currency board. That's what they're calling it. Now, there's talk of making it a currency board. The Congress can do that, and I'm sure Mr. Trump will easily sign it and reduce the size and scope of what they do, and stop torturing everybody. It's just not a healthy system. I mean, we got inflation kicking up again, and they're lowering interest rates, and they're trying to hurt the economy simultaneously. They're starving it with money. But what they're doing is they're only lowering interest rates so that the government can borrow cheaper. In other words, pay back cheaper. And so that's part of the problem there. Now you can see here, the dollar index went into a sell yesterday. Right there. Let's see. Yeah, let's see. Make this. But you see, it's sloping up. So you can't take the short though, because of that right there, traders. The weekly buy. We're in the second week of the weekly buy. So all it's telling us at this point is that there's pressure on the short term for the dollar, but we're not even seeing it in price. I mean, think about the way it's acting the last 2 days. They've lowered the interest rate a quarter percentage point, and the thing is drifting up. And we're in a weekly buy. So, as much as you want to be cautious here because of the dots, the weekly is telling us don't worry about it. It's just a dead cat bounce, And I guess they're going to have to see what happens. Let's see, what's today? The 24th now. So we have 7 more days. We have 27 days until Mr. Trump comes into office. But the Senate and the House start on January 3rd. So the Senate will be Republican controlled, Mr. Trump's party, and the House will be under his control, his party, and so they'll start to do the work that needs to be done. Really what's going to happen is that we'll start to see the work that needs to be done. So, from there, let's take a look at, let's see, where do we go to? Let's go take a look at the euro, see what the euro is up to this morning. Remember, traders, if you want to take a look at anything, just let us know, and we'll point it out, And so then from there, let's see. Oh, and you know what I want to look at real quick before I hit the currencies? Let's take a look at the bonds. We'll go over to the 10-year bond. I just want to see what the bonds are doing. Because, I saw something that said December 6th, the 10-year was trading at I think it was 315 or 319. I'm sorry, no, 419. 419. And now it's trading at 4... let's put it up on the screen here. There's the 10-year. And now, yeah, see, it's still down. You can see that in a sell still, and in a weekly sell for 3 weeks. So, here you have the Federal Reserve lowering rates, and the bond is doing the opposite. It's raising rates. It just shows you the level of incompetency of the Fed at this point. And then let me see. Let's put the bonds up on the screen real quick, and then we'll go over to the euro. Let's see, where's the mousey at? Right there. Trading bonds. And there's the 10 year, and we show you the, oh god, it's at 4.6 now, almost 6.1. Look at that. They must, the Fed must be like talking to themselves. They must be like, how stupid are we? How stupid are we? There is the 7th right there. The yield was 4.15. Today the yield is 4.60, and the Fed has lowered interest rates a quarter percentage point. I mean, talk about what's his name? Powell must be like, what else can I do wrong? I've done wrong by generating inflation for from the beginning of the Biden administration. I increased inflation. Now that I promised a year ago, it was November of 2023. I promised 7 interest rate cuts. We didn't start it until September of 24. So what's that, like 9 months later, right? And he goes and lowers it a half a percentage point, and the market tells him no. Let's go back to September. There's September. He lowers the interest rate a half a percentage point. The bond is yielding 3.65 basically. You can see it there, 3.6490, right? And he lowers interest rates a half a percent. We're like amazed that he does that. And there it is right there in September. And before you know it, that's the 14th. A month later, it's trading at 407 from 365 basically. So 35, and what did I say? 607, 609, 409, and 30 days later, it's almost a half a percentage point up, not down. The interest rates are up a half a point. He's lowered them a half a point. Then he goes and lowers it again, and it keeps on rolling. Then he comes up into November right here. At that point, he's lowered interest rates a half a percentage point. So we'll round these numbers out. It's 3.6. Well, it says 3.62, doesn't it? It says 3.6. Let's see, right there. It's 3.62, I believe. 3.618 to be exact. So let's say 3.62, and 2 months later, it's yielding 4.45, 62. That's 38. That's 38. Let me think. 38 and 62. It goes up 3/4 of a point. He lowered it a half. It goes up 3/4 of a point. He drops it another quarter, and it doesn't help him any. So then there's a little break. He gets a little break. It goes back down to 420, basically 419, right there, maybe even a little bit lower, 415. Gets down to 415, but was 62 to begin with, and then by lowering the rate, it turns around and smacks it again. You can see it here. It's run all the way up to, up to where are we at now today? 4.6. I mean, he must be talking to himself at this point. Hey, Robin, good to see you. He must be talking to himself. It must be like, what did I do wrong now? What did I do wrong? What should I do? I don't know what to do. He must have one of those magic 8 balls, where it says, you ask a question and it says decidedly so, or don't do it, or do it. He must be literally, honestly, he must be like throwing dice or something like that. I don't know. He must be doing something to make decisions, because it's obviously not economic decisions he's not making. He's making very odd decisions. So it's definitely interesting. What can you say? There's not much more you can say but that it's definitely interesting. The Fed has no idea what they're doing, and I think we're going to save the world in a sense from the monster called the U.S. Fed. I think we're going to make it work better. What I want to call is we're going to get rid of the John Maynard Keynes, which runs the place, economic philosophy, and move to Arthur Laffer. Arthur Laffer should have a Nobel Prize. His work has been going on for 45 years. It has been consistent and efficient and right. And there's like, and there's no Nobel Prize for him in economics. They keep on giving these socialist economics. Like, what was that crazy guy that writes for the New York Times, who has never been right about any prediction whatsoever? They gave him a Nobel Prize, I think it was in 2005 or 6, because he basically ridiculed George Bush. That was, totally, made no sense. Nothing he does is right. He writes in the New York Times. It's always wrong. There's a whole history of how wrong he's been. That's the beauty of it all. That is the pure beauty of it all, is how wrong he has been for so long. Wrong, wrong, wrong. All right. Anyway, there's the basic example of how bad the Federal Reserve is. It started lowering rates at 462, and they have expanded now to, the market was anticipating, if he had left it alone and not dropped interest rates a full interest point now, you can see here they're almost up a full interest point. That's the amazing thing. So in other words, he's lowered them at 4.6. It's almost 1 full point now. The low that day was 3 on September 17th was 3.599, right? So 360. And where are we now today? Live right there, 460. So the Fed has lowered the interest rate a full percentage point, and the market has taken it totally away and raised the interest rate to 460. I mean, if I was him, I would just resign and walk out and take my pension. Really. He's not going to have a reputation. There's nothing he's going to do. Or he's going to prove, what's worse is he's going to prove how much influence the leftists have on the Federal Reserve. In other words, he's trapped between what they usually say, like a rock and a hard place. If he does everything correct after Biden is gone, and for the next 2 years under Trump, he does things correct, and the Federal Reserve doesn't interfere in things, it shows you how politically controlled the Federal Reserve is. And so that, in other words, he says, oh, I'm independent. Oh, I'm independent. Oh, I'm independent. Well, he's wrecked our economy for 4 years. So in other words, if he starts doing things right, it would be more condemnation. It would be more of an example of how bad the Federal Reserve is and how inefficient. So that is, matter of fact, that Powell goes or Powell stays, he is no good. In other words, we'll have to come up with taking a sip of my tea there, trader, so please excuse that. Where's my phone at? It's got to be right here somewhere. Oh, there it is. So yeah, that's the story. I think I'm going to put that in there now. It makes sense to do so. I don't want to forget this, and I gotta come up with a way of saying it too, because it is a really a very fascinating thought when you really think about it. If he would resign at right now with Trump coming in, he can prove that the Federal Reserve is not political. But if he stays there for 2 years and everything straightens out, it shows you how political the Federal Reserve is. And you can see on the screen by the charts how bad it's managed. The Fed lowered rates officially by 1 full percentage point, and rates have gone up by 1 full percentage point. So it's like, wait a minute. I don't think I understand. Some people probably are like thinking, what does he mean by that? So the Fed has dropped interest rates a full percentage point, and the market has raised interest rates a full percentage point. And I think we're starting to see some snow now. I hear it. Yep. We're starting to see some snow now too. Cool. Wow. Wow, it just seemed to start out of nowhere. How about that? Well, it was snowing in New York. It's snowing here now. Oh, wait a minute. Okay. Okay. Here I am. I'm back. Here I am. Here I am. Okay, so let's find a way of saying, in the title today of this massive confusion. Isn't that something? Never really thought about it. We've never really dissected it, but here it is, a perfect example in front of it. Now, let me go over there and put the euro up on the screen so you can at least see what's going on in the euro. Now, the euro slid into a daily buy yesterday, but the cable didn't, at least last time I looked. I thought that was interesting. Title. There we are. There's the title. And so we have to come up with that. Now you can see there. Yep, you can see it. It looks like the dollar index. It always is. The euro is, the biggest. It's like 53% of the dollar index to begin with. So it's pretty hard not to look like the dollar index when you're looking at the euro. So with the euro has been going down since October, or basically September. It topped out here in September. Where they were going to lower rates and that would drive the euro higher. The market has told you over and over again, nope, don't trust that concept. Let's see. Now, how can we put this in a title? Because it's like Powell between a rock and a hard place. Or the Fed. Let's do the Fed. It makes it sound like I'm not being so, tough on Powell. Let's see. Fed stuck between a rock let's see, how does that expression go? Rock and a hard place. Let's go get this. Get rid of that. Bing, 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 bing. One more time. Bing, bing, bing. Space. Fed between a rock. We'll get rid of A. There it is. Fed between rock and hard place. That's really what it comes down to. And so, if Powell resigns, he won't get caught being political. If he does not resign, and he stays in office, and the economy turns around, then it's basically, it was politics that made this mess. So the Democrats should be telling him, you got to resign. Go take your pension. We'll give you a job somewhere. And this way, no one will be able to blame the Fed. We already know it's the Fed. We already know we're not paying attention to them anymore. I wonder what the 30-year. Let me go take a look at the 30-year. I would imagine the 30-year might be a little bit discounted. Let's see what the 30-year looks like. That's really cool, having the charts in interest rate yield. Let's see where we want to do there. Make it 6 months. So September, the yield was 3.93. That was the low on the 17th. No, 3.89. Basically 3.90. Let's say 3.90. So 3.90, and it's trading today at 3.80. Okay, yeah. So see, the 30-year is not feeling that pain. I wonder what we could take a look at some of the short terms. It could be even worse in many ways. Let me just take a look at like the 7-year. That's kind of like the door, the 7-year. The yield on September 17th was 3.48, and it's trading today at 3.54. Yeah, see, that's the closer you get shorter term, it's compensating for inflation. That's what it's doing. And so it's only up 0.9% on the 30 year. It's at 1% up for the 10 year. The 7 year, it's up 1.10%. Yeah, so it's even worse because they're anticipating the inflation, and that's what the bond traders do very well. They can't live and die by what's it called? John Maynard Keynes can what they call Keynesian. They cannot live on Keynesian, or they won't make money, and they'll be out of business. So that's why it's always important to follow the real ones, the ones that do make money, and how they make money. You got to know how they're making money. If it's insider knowledge or opportunity or execution, you got to know the exact way they're making the money so you know how to follow them. It's snowing. We got snow coming in, so it's your classic Christmas Eve. Pretty cool. Indeed. So. Now the next thing is, let's take a look at cable. Cable didn't get into the daily buy yesterday. Oh, let's put that up on the screen too. Let's go like this. Let's slide down to the currencies. There it is right there. As we do currencies, we'll look at that. And when we do the metals, we'll slide it back up again. So you can see there, the euro went into a daily buy yesterday. But, and you can see that right there, cutting across. Still is, but it's moving down a little bit. And then the cable is still in a sell. Let's see. There it is right there, cable. It's trying to get into the buy today. That's interesting. Trying to climb into the buy today. And you see the weekly's much closer than the euro, which is interesting also. A little bit further down. And so there's cable. I'm going to do. I'm going to take a quick look. I won't show it to you, but I'll tell you what it is. Let's see what the 5 year. We already know that the 7 year is one way. 5 year. Let's go take a look at the 2 year. Let's see what's happened with the 2 year on the same time scale. Back in September of. So we have a low on the 17th. What's the low? 352. Basically 353, and it's at 435. So that's what's that? The 35 and 47. So that's 82. That's 0.82 of a percentage point. So they're concerned a little bit further out. That's what they're concerned about. The curve. Let's see where the. Let's see the short term, I would imagine, can't get away from it. In other words, the closer it expires, the closer it has to trade to the Federal Reserve. That's what everybody is. That's what all the politicians want. See, that's what they want. They want that lower cost. Yeah. So in other words, when you look at 3-month money, the yield is 4.3. It's right what the Fed has. Well, the Fed is down between 4.25, 4.5. So all the short-term money is there. Even the 1 year is at 4.25, and the 7 year is at 4.5. That's the well, no, I guess 10 year is the highest yield. No, wait a minute, 20 year is 3.8. The highest yield is a 20 year at 4.9 almost. So talk about being even way more off. All right, let's go check out the Swiss. Right there. There's the Swiss. And let's see what else we got going on here. Swissies. You see, Swiss is still banging against that top end of the range. It tried to get in. Did it get into the sell? Let's see, where's it at? Swiss 39, is it? 43. It's still in the sell for a day. It because of the red dot. Now today, it's trying to. It got into the sell yesterday. Let's see how it Matter of fact, is that a red and a green? Wait a second. Maybe that was a red and a green and I didn't realize that. Yeah, that was a red and a green. So instead, it's been in the buy now 2, 4, 6, 8, 10, 11 days. So we'll just fix that. 11 days. And it didn't go into the... it didn't go into that. Interesting. Interesting. Very interesting. All right. And so it never got into that cell. That's why there's no line in there, too. Let's see. What am I looking for here? There it is. Okay, here we go. Yeah, so there we go. So in the end result is that the whole story in the end result is that the Fed doesn't know what it's doing, and we all see it. You know, they can't hide it. You know, if you gave the mainstream media tried to hide these stories too. Remember, you know, they kept on saying, "Oh, don't worry about the inflation." You know, the government tells us it's not going to be here. Matter of fact, they even now talk about it like it's gone away. It's not here. Don't worry about it. Don't worry about it. What can you say? Just too crazy. Too crazy. Crazy. There we are. And I'm going to fix that too on the other screen, another machine, 26th. And we'll make the Swiss 11 days. 11 days. There we are. There we go. All right. From the Swiss, we'll go over to the yen, see what the yen is up to. There's the yen right there. And the yen, you know, we're seeing the yen try to step outside its box. We're a little sad about that, of course. You know, we're not really happy about that. So, let's see. There we go. That's fine. And we got that fixed now, too. All right. There we go. So from there, what else can we say about the yen? I think I saw Hong Kong was down. Tokyo was down. Let's see. Let's take a look at it on the other screen, just to see what they were doing with the stock market there. There we go. Yeah, so it was down for the day, but it's been rising. Let me just show it to you real quick. But it's right there. And it's going into the sell, too, at the same time. As it's in the daily sell, it's in the weekly sell. So there's probably going to be some pressure on it. Now, remember, traders, there's tax selling going on right now. You know, everybody collects taxes by the end of the year. You know, you have to have your tax position set by the end of the year. So, markets, after tomorrow, I guess it's after the 26th. So we're going to start to see next year's markets probably on Thursday. Fund managers will start to do some buying, that type of thing. They will try to sell what they need to sell. You know, they need to cross match. As a manager, be it a bond trading manager or currency trading manager, or if you were long or a stock trading manager, if you have losses you want to take, you got to sell some of your gains at the same time. So you got to sell your losses, take that on your balance sheet, and then you've got to go and sell at the same time. Also, two different types of sells. The second sell is the winning stocks, and that's why you've seen the top stocks, you know, go in and out, and have pressure on them, and you see some, you know, where there's so many more buyers for them for next year because of their earnings and so forth, that it kind of calms it down. But we've seen some good moves on the downside, with some big names, and the money managers know. They know who who's naughty or nice, basically, just like in this, the Christmas thing. They know who's naughty or nice. So, abracadabra, exactly, abracadabra. There we are. So that will be what's going on next. We will be watching for that. That's exactly it. We'll be watching for that. There we are. Dee, 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 dee. All right, traders. From there, we go over to the Great Experiment. Let's see what's going on with the Great Experiment. And there it is, Turkish lira. It went into the buy yesterday. Let's grab one of these buys. And look at that weekly. And we were giving credit to the Turkish lira. I'm sorry, the euro, as helping the Turkish lira, go on this nice little slide from the 30. I don't know what you want to call it. From the September area here, from the 38.5 area, it made it all the way down to the 35 area for a day, and then basically got stuck in the 36ish area for a while. And now it's starting to make a turn on the upside here. And we'll see if this thing, let's see, that's the wrong symbol. We want to do this. Remove that. We want to put the square in there, like that. There it is. It's playing with the buy now. So that's the power of what's going on. Let's see, save that workspace there. There we go. Let's head over to South Africa. We saw gold yesterday again acting sloppy. More pressure on the upside. Again, this could be end of year. Remember that. Most of these governments and central banks are pretty much broke. A lot of them have a lot of pressure on them financially. A lot of times we'll see, like we saw when they were trying to fight inflation, they were borrowing money from the the Federal Reserve. Things like that. Britain did the same thing. They tried to do the end of the year thing, and the next thing you know, they're borrowing money from the Federal Reserve. They don't like to publish that stuff, and probably the White House has probably told them to stop publishing it. That's the problem. Is the mainstream media does whatever the Democrats tell them to do, since they're owned by the Democrats. I know that's really weird, but it is what it is. But luckily, the modern era of internet and so forth has stolen has taken their position, so they're not the trusted source of information by all. Only a good 30% of the population pays attention to them now, and they have no newsrooms anymore. Their newsrooms are incredibly small. They used to have thousands working in them. Now they have like 30 people working in them. They all say the same message. If you watch ABC, it says the same thing as CBS. CBS says the same thing as NBC. NBC says the same thing as PBS. PBS says the same thing of CNN. CNN says the same thing of MSNBC. New York Times says the same thing of MSNBC and ABC and CBS and all the rest of them. All these national newspapers and so forth just basically say the same thing over and over again. So, all right. From there, there it is. There, we're showing you the South African rand, right there, moving up. So we slide over to gold. Let's see what gold's doing this morning. There's gold. See, it's flat. Luckily, it's not getting crushed. You can see the weekly as it's getting smashed down. And let's scroll up on that. There it is right there. There's crude oil, 2 days in a buy. You got gold, 2 days in a buy. You got silver. We saw silver. It actually closed in a daily buy last night. Let's show you silver right there. It closed in a buy. So we can fix that also at the same time. Let's see. So silver is a 1 there. There we are. And so that's, showing its strength. And let's see, what else is there? Who else is there? Let's take a look at copper. You know, when we look at copper, we automatically think of ourselves looking at China, and we saw, excuse me, we saw something this morning which is very interesting. Let me show you that. It was looking at what was it looking at? It was looking at the Asian countries in general. And so we'll find that. There we go. So let's see. Let's find it, and you'll see it up on the screen. Very interesting. There it is, right there. There we are. Check this out. It's showing us the strength in GDP. GDP. China's GDP is now lagging the rest of the Asian nations, and it's probably more because they have a fixed currency. But it's hard to say. I think one of the top ones, or is it not? Yeah, the ones at 5.4. I think Thailand fixes its baht, is it, to the dollar too. So you can't just blame, I guess you could say, being fixed, but it does free float, so you can drive it. Well, it's pretty hard to define anything that's fixed to the dollar as free floating. Let's put it that way. That always, confuses me without a doubt. All right, there we are. There we go. So. Let's see it go like that. And let's see what we got here. So that's the different countries over there, which I thought was fascinating. You got China, Japan, Vietnam, Singapore, Thailand, Malaysia, Indonesia, Philippines, and India. And so there you see the strength in them, which is interesting. Philippines, wow, Philippines is really moving up strong. All right, and then from there, we shoot over to let's see. Let's take a look at copper. There's copper. And this is heading on to a third day in a buy. Right there. So yesterday was the second day. Today, yesterday was the second day, and it looks like we're still holding on by a hair there. Still in a weekly sell though. And then we'll take a look at platinum. Right there. There's platinum. And platinum is doing that same thing. You can see it on the screen there. Platinum's in a daily buy for 3 days and still in a weekly sell. They don't seem to be able to get it to go. I find that to be really interesting. It just doesn't want to let go of that. And no matter what they do, it seems like platinum is, the pairs trade that everybody uses. I guess that's what it comes down to. It's like the pair trade. So, all right, and then from there, what do we do from there? We go to the energy sector. Let's go take a look at the energy sector. Push you over to there. And go to there. There it is. You see that it's lifting up a little bit. It's been in a sell for a couple days, and then it jumped into the buy 2 days back. doesn't have a green dot there. That's the interesting thing. And it's in the weekly buy. It must have been a green dot there somewhere for me to be in there. Probably on the other platform. Just take a look and see. Yeah. Let me just show it to you. Right there. So it's a battle between the new beta and that, and I have no problem, just trying to tell us. It's telling us just to be neutral at this point. That's what it really is telling us. Then from there we'll go over to let's see, which heating oil. Do we have the other heating oil in here now? Let's double check. Yeah, there's the March. That's copper. So let's take a look at this heating oil. I should be replacing it. It's at the end of its road. So let's go do this. We'll go to it. It's still showing trades there. Shows it's in the buy for 3 days and a weekly buy for 2 weeks. Now let's take a copy of that, and we'll go like that. Copy. And let's see, what are you seeing here? Okay, let's do this. Instead of torturing you, let's put the heating oil, which is February now, up on the other screen, and you can watch it from there. Till I get this done. There it is right there. This way it matches up to. Yeah, you see there, it went into the buy a couple of days ago like that. Same as the beta. Now let's add that as a product and get rid of the old product. Add product. Paste. That will be G. Bingo. And heating oil. Feb. Why not? Create. All right. Let's see where. Probably put it down at the bottom, which is cool. Oh yeah, that's what happens when it's not expiring. Interesting. It's doing the same thing. It's in a buy. Let's show it to you there. This is the February one that I'm following. Right there. See, it's in a buy. So it went into the buy here. It was in a weekly buy for 2 weeks now. So when it went into the buy, I guess it would be right there. Is that? That's 5. 1, 2, 3, somewhere's around here. Went into a buy. It never really got into this. Well, it never got into the sell. It went into a daily sell there, but then it jumped back into a buy in here. So, but it was in a weekly buy, so you couldn't take the short. All right, traders. Let's take a look at. That is the heating oil. Let's take a look at Brent. See what Brent is doing. And that heating oil is the kerosene and the diesel and so forth. I always like to remind everybody that is the thing that powers basically a lot of all the airplanes in the sky, and at the same time the big trucks on the highways and so forth. Anything diesel. Let's see. Let's take a look at Brent. There's Brent. And Brent is drifting around, just going into the buy there. Notice 4 weeks in a buy in that thing. That thing's been acting very well. Very, very well. Usually it's marching almost perfectly with the dollar, but in this case it's not exactly doing that. Interesting. Interesting. Dee 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 dee. Dee dee dee. Okay. Alrighty. So traders, I guess we're about done. I mean, that's pretty much. Oh, let's look at nat gas. Let's see where natural gas is at. Natural gas right there. There's natural gas. Doing that thing. It's trying to get into the sell, but it's 2 weeks in a buy. You can see that there. That's also having those issues. And we'll march over to the what is it? The GMC, the energy company down in Spain, right there. Get a flavor for what the cost is. Look at that. They've made a low there yesterday. It's down into the 11s now. So it's been in a weekly sell since up in here, where it was the 1250 area, 1260, and it's taken itself down to the 1160, basically. So it's dropped a whole dollar. You can see the pressure on it. More sells than buys, that's for sure. And you couldn't take any of the buys. You only could play the sell sides. So, all right, traders. Everybody have a safe and smart holiday. And we'll catch you, I'm not sure which day we're coming back on. Do we come back on Thursday or Friday? I don't know. I'll wait and see what Dukascopy does. So we'll go from there. So this is Doc saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Everybody have a safe and smart trading day or holiday, and we'll catch you all in the next day or two. I guess it'll be Thursday or Friday, one or the other. So, ta-ta for now.